There is a specific kind of afternoon every trader remembers. The market is quiet, painfully quiet. The chart is drifting sideways like it fell asleep, and you are half watching it, half scrolling your phone, and then, with no headline, no news, no reason you can find anywhere, the floor just disappears. In 20 minutes, the thing drops further than it moved in the last 3 weeks. You refresh the news, nothing. You check if a war started, it didn't. The market just, for no reason you can see, completely lost its mind. Here is the thing, nobody tells you about days like that. The market did not lose its mind, it found it. Because underneath every price on your screen, there is a machine almost nobody talks about, and that machine has 2 settings. On one setting, it acts like a shock absorber, quietly soaking up every bump and keeping the road smooth. On the other setting, it pours gasoline on every move and lights a match. Same machine, same market, 2 completely different animals, and the switch between them is invisible unless you know exactly where to look. This is not a video about news or earnings or some guru's secret pattern. It is about the hidden plumbing under the market called gamma, and the moment that plumbing flips from calming the market down to driving it insane. And there's a 4th thing at the end that almost nobody warns you about. The reason this machine quietly punishes you for thinking the chaos was your fault. My name is ST, and I spend a genuinely unreasonable amount of time thinking about markets and why they behave the way they do. If you have ever stared at a candle that made no sense and felt like the game runs on rules nobody handed you, subscribe and hit the like button, because today we are mapping exactly where those rules flip. Quick thing first, I am not a financial advisor and this is not financial advice. These are just patterns I have watched play out over and over. And the first one explains more violent market days than any news story ever will. So let me reset where you actually stand, because it is not where most people think. When you buy or sell a stock, you assume the person on the other side has an opinion. They think it goes up, you think it goes down, somebody is right. But a huge slice of the market today has no opinion at all. The biggest players in options are dealers, the market makers who sell you your calls and puts. And a market maker does not want to bet on direction. They want to collect the spread and stay neutral. So every time the price moves, they are forced to buy or sell stock just to cancel out their risk. They are not trading the market, they are hedging it. And on some days, there are so many of them doing so much hedging that their robot, like buying and selling, becomes the market. That is the machine. Now let me show you its 2 settings. Because the difference between them is the difference between a boring Tuesday and a day that ends up in the history books. Setting 1, positive gamma, the market on sedatives. First, let me cash out that word because gamma sounds like math homework and it is actually simple. Gamma is just how fast a dealer's hedge has to change as the price moves. That is it. When dealers are in positive gamma, their hedging runs against the move. The market dips, they buy. The market pops, they sell. Read that again because it is the whole point. They are leaning against you in the nicest possible way. Every little drop gets met with their buying. Every little rally gets met with their selling. The result is a market that feels pinned, sticky, almost lazy. Tight ranges. Dips that get bought before you can even react. The boring grind higher that makes people fall asleep. When you hear that the market is in a positive gamma regime, that is the shock absorber doing its job. It is quietly eating volatility for breakfast, and here is the part that matters. That calm is not safety. That calm is the machine holding the spring down. Because the market can flip to its other setting in a single afternoon, and the line where it flips even has a name. Setting 2 starts at a level traders. Call the gamma flip. The 0 line, the trapdoor. Above it, dealers are calming the market down. Below it, they start doing the exact opposite. And the cruel part is that nothing visibly changes at that level. The chart does not ring a bell. You just cross a price, and the machine quietly reverses its polarity. And now the thing that was absorbing every shock starts amplifying every shock instead. So watch what happens the moment you fall through it. Setting 2 for real. Negative gamma, the market loses its mind. Now the dealer's hedging runs with the move instead of against it. The market falls, and to stay neutral, they are forced to sell. Their selling pushes it lower, which forces them to sell even more, which pushes it lower again. It is a feedback loop with no opinion and no off switch. The same thing happens to the upside. The market rips, they are forced to buy, their buying pushes it higher, so they buy more. This is why sell-offs in a negative gamma regime do not feel like selling. They feel like the floor vanishing, air pockets, cascades, moves that seem to come from nowhere, because they did come from nowhere. There was no news. There was just a machine selling because the price fell, and the price falling because the machine sold. And if you want to see what that machine can do when it is fully unleashed, look at February 5th, 218, a day traders now just call Volmageddon. There was no crisis, no bank failed. The S&P 500 fell about 4.1%, its worst day since 2011. The Dow dropped about 1,175 points, the largest point drop in its history at the time. But the real story was volatility itself. The VIX, the market's fear gauge, went from about 17 to about 37 in a single day. A jump of roughly 116%, the biggest one-day spike since the VIX was born in 1993. And a whole family of products that had quietly bet on calm continuing. The short volatility trade lost more than 90% of their value in a matter of hours. One of the most famous, Fort Synth, basically died overnight. People went to bed comfortable and woke up wiped out, not because the economy changed. Because the machine flipped to negative gamma, the hedging fed on itself, and the calm that everyone had been leaning on turned out to be the exact thing setting the trap. So that is the dark side, and it gets darker, because this loop does not just work on the way down, it works just as violently on the way up. And that version even has a cooler name. The gamma squeeze? Here's the part the hype channels get half right and never explain. When a crowd buys an enormous pile of call options on one stock, the dealers who sold those calls are now short. To stay neutral, they have to buy the underlying stock. The stock rises toward those call strikes, which forces them to buy even more, which pushes it higher, which forces more buying. Same feedback loop pointed at the sky. The cleanest example anyone has ever seen was GameStop in January 2021. The stock went from around $20 on January 12th to an intraday high of $483 on January 28th. That is a move of more than 20,300% in about 2 weeks. Yes, there was a short squeeze and a Reddit army involved. But a giant part of that rocket was just dealers mechanically buying stock to hedge calls they never wanted to be short. The machine does not care which direction. It just amplifies whatever is already happening. And here is what should genuinely unsettle you. The market has gotten more fragile, not less, because of the explosion in same-day options, the ones that expire in hours. Those options have the most violent gamma of all, and there is now so much trading in them on some days that the machine can flip its setting and back again before lunch. Which brings me to the fourth thing, the one almost nobody warns you about, and it is not about the math at all. It is about you. The most expensive mistake traders make around all of this is thinking the chaos was their fault. You had a clean setup, the chart looked perfect. You took the trade, and the market did something so violent and so senseless that you assumed you misread it. So you tweak your strategy, you add an indicator, you blame your discipline. When the truth is your analysis might have been completely fine and the machine simply flipped to negative gamma underneath you and turned a normal pullback into a cascade that no chart pattern was ever going to predict. That is the trap. You are always trading inside one of these two regimes every single day, whether you know it or not. And if you do not know which one you're in, you will spend years taking the market's mood swings personally, rebuilding a strategy that was never broken, trying to fix a you that was never the problem. So let me hand you something better than another indicator. The point of seeing this machine clearly is not to predict the next crash. You cannot. It is to stop being shocked by it. The calm days and the insane days are not two different markets. They are the same machine in two different moods, and the quiet is usually what is loading the spring for the violence. When the market feels boringly pinned, that is positive gamma holding it down, and it is also fragility quietly building underneath. When the market falls off a cliff for no reason, that is not the market being broken. That is the machine doing exactly what it is built to do. The traders who survive this are not the ones who predict the flip. They are the ones who stop betting their whole account on calm continuing, who size smaller when they cannot see the regime, and who never again confuse a quiet market for a safe one. So think back to that afternoon. The quiet chart, the floor vanishing, the feeling that the market completely lost its mind. Here's the secret. Nobody says out loud. It was never reacting to you, or to the news, or to your perfect setup. It was reacting to a machine hedging itself in the dark. The whole trick to surviving this game is making sure you never mistake the machine's mood for your own mistake. If this gave you a new way to see the days that never made sense before, do me a favor and subscribe, because the next thing we are breaking down is how to actually see these gamma levels on a chart before the floor disappears, instead of finding out the hard way. I will see you in that one.